The IRS has made a surprising update that could completely change how you handle crypto taxes in 2025. If you've been following along, you might remember the December 31st deadline for safe harbor rules. Maybe you missed it and thought you were stuck with fewer options, but there's good news. The IRS has announced temporary relief. This gives you extra time to choose how your crypto trades are taxed instead of being forced into the FIFO first in, first out method. But what's FIFO and why does it matter? Imagine you bought Bitcoin at different times, some years ago for $10,000 and more recently for $90,000. FIFO means that when you sell Bitcoin, the IRS assumes you're selling the oldest coins, the $10,000 ones, first. Why is that a problem? If prices have gone up since you bought those coins, selling the older, cheaper ones means bigger profits on paper. And bigger profits mean bigger taxes. During a bull market where prices are rising, this can leave you with a huge tax bill. The safe harbor option was a way to avoid this by letting you choose how to calculate your taxes more strategically. For example, you could use methods like HIFO, highest in, first out, where you sell the most expensive coins first, or specific identification, where you pick and choose which coins to sell. These methods can lower your taxable profits and your tax bill. The IRS relief means FIFO isn't mandatory yet. This extra time is a chance to organize your records, think through your strategy, and avoid rushing into decisions that could cost you more in the long run. Now's the perfect time to subscribe to the channel if you haven't already. Hit that subscribe button and stay ahead of the game. But don't wait too long to take action. This relief is temporary, and the IRS is still serious about regulating crypto. Starting in 2025, exchanges will have to report detailed information about your trades, including your gains, losses, and how much you paid for your assets, your cost basis. Without a plan in place, you could face surprises when the new rules kick in. If you've already prepared a safe harbor statement, you're ahead of the game. Great job! Keep it handy and work with a tax professional to ensure everything is in order. If you haven't acted yet, don't worry, this is your second chance. In our previous video, I explained what steps are necessary to avoid the FIFO method. Even though the IRS has changed the rules, that process still applies to keeping your crypto in order. Use this time wisely to gather your records, review your transactions, and decide how to calculate your gains when you sell crypto. The new deadline is December 31st, 2025. This gives you more time, but don't let it lull you into procrastination. The relief also clarifies that methods like HIFO and specific identification are available until the new rules fully take effect. It's also important to note that this delay is a response to pushback from the crypto industry. Many exchanges aren't ready to provide the detailed reports the IRS wants, and lawsuits like the one filed by the Blockchain Association are challenging these new rules. The Blockchain Association's lawsuit argues that the new broker reporting requirements violate the US Constitution and pose significant privacy concerns for crypto users. By mandating detailed disclosures of taxpayer information, the rules are seen as overly intrusive and burdensome for both exchanges and investors. However, don't be fooled. The IRS isn't backing down. Governments want to ensure proper taxation as crypto becomes more popular and valuable, and they're likely to continue pushing for stricter regulations in the future. This makes it even more important for you to stay informed and take proactive steps to get your tax situation in order. Being prepared means fewer headaches and potentially saving a lot of money. Click the like button if you like this kind of content, and as always, stay curious and stay hodling.